Hello, traders. Welcome again to another Trader Bite. It's 8:01 a.m. Chicago time, 11 on November 28th, 2018. It is a Wednesday, hump day, middle of the week. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So the sentiment this morning is risk on. The Dow Jones are leading the pack 165 points to the positive side, or 0.67%. The Nasdaq strong as well today, coming in at plus 42 points, 0.62%. Crude oil is a laggard this morning, losing 36 cents, trading at 51.20. And then we see the safety assets, the 10-year note, the bonds, and so on, are just slightly down. Now, remember yesterday we started the day with sentiment that was slightly risk off. It was looking like selling was much more likely in the morning. Um, and we did get that a little bit in the S&P minis. We'll review that in a second. But overall, the market is putting risk on, and the S&P is well on its way to the 2,700 century figure currently. Uh, in terms of economic releases, we did get GDP this morning, came in line on both the preliminary GDP price index as well as the annualized Q-on-Q GDP came in at 3.5% in line. Advanced goods trade came in just basically in line, and so on and so forth. Really not much to report here. There are some headlines on Intel that crossed the wires, but also the president and the secretary of the Treasury here in the U.S. are attacking GM for potentially moving jobs abroad. And so that's where we stand. The G20 meeting is still happening this weekend. And Fed Chair Powell is due to speak later today. So what's remaining on the calendar that may impact our trading? We do get new home sales at 10 Eastern, 9 Central. We do get crude oil inventories today, and we've had and will continue to have a slew of central bankers. ECB speakers have been kind of parading in a parade all morning today, and it will continue to do so. And again, Fed Chair Powell is to speak at 12 Eastern, 11 Central at the Economic Club of New York. So that's where we stand. Let's take a look at what we expected yesterday in our review segment. So yesterday, the primary scenario, given the way we were opening, if you recall, it was a profile that was quite balanced with a weak low. The expectation is that it was likely to pull back and push lower. So the main trade that I was looking for early on today is for us to move up, find resistance, and rotate down. So I was looking for resistance around 2667.50, that stock zone that's marked right there in pink. This 2667.50, and I was looking and I was talking yesterday about gleaning signs, picking up signs that it's weakening for a sell opportunity, and I was looking for yesterday's low to be taken. So the overnight low was the first target that was expected, and then I was looking for the prior day's low to be taken out at 52.50, and for the one-time framing up to end on the daily in the S&P 500. So that's what was expected. What actually played out was scenario 2, where we sold off, we went to the overnight low, and then we ended up buying, 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 buying. And we scenario two had us going to 2680. We ended up at 2686 on the high, or 2684 on the high. So we started to push into the 2686 50 stock zone there, and that's what took place. Here's what actually happened. So essentially what we had yesterday is a play both ways. Let's turn these off. So we had to play both ways. We pushed up into the open. So far so good. We push up into the open. If the stock zone has been moved now, but remember it was 2667.50. We ended up pushing to 2668 and a quarter. So we pushed through by 3 ticks. We did not close the prior days. We did not touch the prior day's close. But remember, on the way up, I had talked about wanting to look for the short. The short happened. It took place, and we had a really good rotation down from 2668 and a quarter to 2655 and a quarter, which happened to be the overnight low to the tick. So we fulfilled the overnight stat. The overnight stat's that 98% of the days, the historical probability of all uh, days tested, which is around 2,000 or so days. The S&P will likely touch or breach the overnight low or the overnight high on 98% of days. Yesterday it touched and then it turned around. So this looked for a moment like it was going to pull back and then continue lower, and the next area would have been the low of 2652.50. A break of that ends the one-time framing up. I expect it to slip and quickly move lower. It did not. So this worked out almost perfectly. And then from there, it just could not, we could see it in the order flow, it just, sellers could not, for the effort they were making, could not gain territory in price and lower prices, and it just continued to rotate higher. We took out the opening swing high, and we pushed right into the prior day's high, and we one-ticked it. This was a one-tick failed auction right here. Retest and break lower back to mid VWAP, and then we get this erratic, what seemed to me at the time as like an erratic push, and we have range extension up. We spend a lot of the rest of the session just trading this area, this 2666 area, and then we finally break higher into balance on the close. The high print of the day is the closing print of the day. Quite bullish behavior. The profiles you can see yet again. Remember, I was talking about these profiles that just have really poor highs and are just very jagged. We get more of that. So the composite in this area is also reflecting historically this behavior where there's just no consensus. The market's not able to find consensus and give us more of an even distribution, whether it's in the on the edge, even, or at the bottom. It's not giving us that. It's giving us more of a distribution that shows that both sides are active and are absorbing and kind of whacking each other throughout the range. That leads us in. So this is scenario number 2 that ended up working out. So scenario 1 lasted all but 15, 20 minutes, and then scenario 2 kicked in, and then that carries us into the overnight session. We reopen, push higher immediately. So this is an interrupted auction here. Closing at the high is a high probability continuation in that direction. And with just a lot of volume going off near the highs, and we continue, and we have this Asian session that's relatively quiet, as they often are, and then the Europeans come in here somewhere, and they sell it off a little bit. We come right back to yesterday's close, and we've been drifting up ever since. The volume overnight is meh, relatively low on the big picture, on the composite going back a while. The volume is higher than the mode, than what's historically expected to be the most common. But overall, the overnight session shows a multi-distribution profile. Okay, a double distribution, not very clean. We really had a lot of balance throughout the overnight session. Pretty fat profile. The market is tiptoeing its way up. Um, it's not really doing it in a hurry. So it's hard to say other than the fact that, hey, we're one time framing up, the trend is up. So the big picture, the daily time frame is bullish. And so when the market's bullish, we tend to have lower volatility, lower range, lower volume, and we tend to grind through as we push higher and higher and higher. Yesterday, we closed the gap that was put in on November 20th, and we're pushing into the days that preceded that gap, and which tended to be somewhat balanced in nature as the market fell. It was kind of doing it slowly until it gapped down. Here's what the overall picture looks like. Okay, so we looked at this yesterday as well. What we have here is a market that is one time framing up, higher low, higher low, higher low, higher low, right? So the expectation yesterday was we're likely to break this low, and that ends that. So we then have a, oops, then we would then expect the move to look something like this. Which did not happen. So instead, we walked up, we took out the gap zone, and we are in this fat distribution right now from the 19th. Okay, so that's your template day. So this is where we stand currently. The balance price down here is 26.6450. So any rotation down from these prices are likely to target this big balance price. So that's the review. Let's move on. What are we expecting for today? One second. Here's what we're expecting for today. Before I get into that, though, I want to remind Convergence members one more time, actually probably a couple more times, about the fact that you need to sign your waiver, your consent form. We are adding Trade the News, $185 per month value to your membership, to be included in your membership. In order for your membership to renew this month, you must sign a consent form. Please go to this link at bit.ly/news upgrade. If you're interested in convergent trading, it's at convergenttrading.com. This is a great deal, and all members have to sign on to it for everyone to get it. So please take a moment now to go and take care of this consent form. It is due today. Thanks. All right, so what do we have? So we don't have much in terms of what could interrupt our auction today in terms of releases. Come on, buddy. Charts are a little bit slow. I'm on a laptop. I'm actually building a workstation for home to avoid this problem for when I need to be at home. So moving this profile forward, you can see how fat this profile is and skewed to the high side. As we move the profile forward, it starts to fill in upwards, but there's quite a prominent point of control there. Probably a magnet. This morning we have a gap We're opening in a gap. The expectation this morning is for responsive selling, slight responsive selling towards yesterday's high. The expectation is for an open auction that pushes the high, gets responsive, moves towards the high, with a potential for a push towards 2680 or so. And then I'm looking for it to pop back up and consolidate in the middle here. I don't expect anything major to drive the market today. Of course, the news feed is very busy. The push up could push all the way up to 2704, which is the 50% retracement of this last small swing, and some confluence there with a couple of factors: the stock zone 2705, the high from back here 2703.50. The area I expect to see tested here is around 2704. Could push as far as 2708. But I'm looking for it to open, push up, and then rotate over and then start to push into the prior day's range. That's the main trade for the day. So again, yes, that's the idea. Yes, I'm interested. What is that? How does that set me up? It basically says, look, if we start to push the overnight high, monitor how it's behaving towards 2703.50 to 2705, all the way up to 2708. How are we responding? How are we responding? How are the buyers responding to higher prices? Are they becoming more and more motivated as prices go higher? In other words, do we see bigger size lifting, and so on? And then I'm looking for a fail point. If we never get that fail point, then I expect the gap zone to remain open, and for it to just continue to push higher in the area, the next area up that I'm looking for in that situation. If we don't close this gap, we're likely to ride right up this flagpole right here to 27.22 for the range. Okay, that gives us our daily range, which is around 30 points, 25 to 30 points. The secondary scenario is an open that drifts down towards the gap zone. It's responsive, gets back in there. We get an impulse up, consolidate, and we start to walk and find resistance on the way up. Again, all the way up potentially to 27.20, 27.22. Now I'm going to give you a third scenario because it's got a pretty decent probability given the gap that's open, and that is an open test up drive drive. So we're looking for a big impulse down that pushes down into yesterday's point of control, into this 2672 area, and then potentially pushing down back into balance at 2664.50. Okay, that's scenario 3. That's all I have for you. Again, please take a moment. If you're a Convergent member, please take a moment to sign the consent form. You only have to do it once. We need you to do that so we can have a smooth transition into next month. Good luck today, and I'll catch you soon. Take care.